Hey, what's going on, guys? Andrew here, and today we are going to be talking about the recent interviews that the CEO of Robinhood, Vlad, has been in with CNBC and CNN and a couple of other people, and we're going to talk about what he said addressing the liquidity issues, possible Citadel moving their hand a little bit into making these restrictions in order for Citadel to benefit. He also talks about Dave Portnoy and why Dave Portnoy is wrong and the reason just why they limited the trading. So I'm going to give my thoughts on this and why I think Robinhood is doing investors and customers wrong. And as always, if you enjoy the video, make sure you subscribe. We're on the road to 1,000 subscribers and we are getting there. So I appreciate all the support. And without further ado, let's get right into it. Now, the Robinhood CEO was on CNBC discussing the recent backlash due to restricting trading on popular stocks that Wallstreetbets has been all over recently, like AMC, GME, NOK, and several other different stocks. Now, the reason he said that they had to restrict trading was due to SEC net capital requirements and also meeting clearinghouse deposit requirements. Now, this is interesting because he said this had nothing to do with a liquidity issue, which he was asked multiple times about. Now, it's funny because SEC net capital requirements means you have to have a certain amount of money to deal with the volatility, and also the same thing with the clearinghouse deposits. Now, this, in fact, would be a liquidity issue if they could not meet these requirements. Now, Vlad said that this was a risk management decision for Robinhood and also the users on the platform. Now, I do think it is a risk management decision, but I think that risk management is the liquidity risk, and I do think that they're running out of liquidity. And this is actually bad for the long term because if Robinhood cannot afford and cannot handle this amount of volatility and this amount of people trading on their platform, then they do not have a shot at being one of the top brokers. Now, Vlad said that they did this so they can protect Robinhood users, which personally I do not believe because over 50% of Robinhood users had a position in GameStop, whether that was options or whether that was shares. And on Robinhood, you actually cannot short a stock. So when they limited and restricted the buying opportunities on GameStop, all the people who had shares were losing money due to the sell-off and due to only being able to sell. And all the people that had calls were also losing money due to the price not being able to go up because everybody was selling. Now, it would make more sense that if Robinhood had the ability to short sell on their platform, then the people that were short selling would be able to make the money. But we all know that the only people that were short selling GameStop was the hedge funds. Now, Dave Portnoy has also made claims that Citadel pressured Robinhood into restricting this trading in order for Citadel to profit off of these shorts.
There's just no rational explanation on why they would do what they did without outside pressure, interference. They had to know what they did was against all their clients. Their clients were the ones who were making money, and they basically cratered the stock on purpose. So I just don't believe anything that guy says. I want to take a cold shower after seeing him say that.
Now, Vlad completely denies this, saying that there was no involvement and no communication between them and Citadel, but it is definitely something to note that Citadel is a big investor into Robinhood. Now, as a response from the community to this restriction of trading, lots of users decided to give Robinhood a 1-star rating. Now, in the interview, Vlad also talks about how Robinhood was the #1 app in the App Store, and after getting almost 200,000 1-star views on Friday, they got down to a 1-star rating, which is actually pretty insane from being one of the top apps to the App Store to having a 1-star rating. Now, Google actually removed over 100,000 of these 1-star ratings because according to Google's policy, they do not allow manipulation of the app ratings. Now, personally, you can call it manipulation, but honestly, these are honest reviews. Nobody wants to get their trade restricted, and I do think a lot of people are going to be switching off the Robinhood app because of this. Now, Robinhood actually lifted this restriction slightly from not being able to buy these stocks at all to be able to buy a limited amount of these stocks. And when I say limited, I mean limited. They also had over 50 other stocks that they had limits on, including most of these stocks only being able to buy 1 share, which I think is pretty crazy. And I think it really shows that Robinhood is having some underlying issue here. And this underlying issue is most likely a liquidity issue, which is bad long-term for Robinhood. Now, thanks to this MSN article, we actually have a chart of the most recent set of restrictions, And it's absolutely insane because a lot of these stocks aren't even being talked about. A lot of these stocks aren't even that volatile. Like if you want to talk about Beyond Meat, there's also, they have Starbucks here, they have silver here. Like this doesn't make much sense to me personally. And the fact that they have to limit all these stocks to even one share per order, like AAL or ACB, I think it's absolutely insane. And the reason that they are doing this is because they have a further liquidity issue at hand. Now, many politicians on Twitter have been collectively talking about how Robinhood needs to be investigated for market manipulation, and as we've seen over the past few days, there has been 2 class action lawsuits filed against Robinhood, as you can see from this tweet by Lydia Monahan right here. Now, it's likely pretty obvious my thoughts on this situation. I do believe that Robinhood should be investigated. Whether or not anybody's actually going to be charged seems very unlikely in my opinion, because like in 2008, it was very hard to charge those big hedge fund billionaires and all these big investment banks. Now, I do think that there's going to be a lot of backlash with Robinhood. I've already seen a lot of people transfer over to Webull, another free commission mobile app and broker. And I also see a lot of people transferring over to TD Ameritrade or E-Trade, and they just want to get their money out of Robinhood, which is completely acceptable and completely understandable because they do not want to have to deal with all these restrictions, and nobody wants to have to deal with a broker that does not have liquidity. Now, due to all these restrictions, you might think that this train is coming to an end, but a lot of people, especially the Redditors on Wallstreetbets, think that there's still a lot of meat left on this bone due to the expiring options on Friday and a possible gamma squeeze into Monday. Now, I actually do like the charts on GameStop. As you can see, it has this nice triangle here and it's held very well. And it's starting to get some bullish momentum here with a little bit of volume, even after all of the restrictions. So we're going to have to see how this chart pattern plays out, but it definitely does support the bullish case. Now, Wallstreetbets just doesn't seem to have an end game here. I think they're just going to continue to try to burn all of these hedge funds and major investment banks on these short float stocks and just try to take advantage of their huge community that they brought together. And clearly what they've been doing has been working. We haven't really seen a revolution like this against these major banks and these billionaires and these hedge fund managers ever before. They've even taken out Citron Research with after 20 years of doing short reports and trying to short many of these hype stocks. They've decided to flip the switch and now do long reports. Now, the next few weeks are going to be very interesting for Robinhood. If they continue to have these restrictions, it'll give investors and users the idea that they are having underlying liquidity issues and that they are not doing what they say they are going to do, which is help and benefit the individual investor like the name Robinhood implies. So it's going to be really interesting. We're going to have to see how it plays out. But that is it for the video, guys. Let me know your thoughts below. And of course, if you enjoyed, make sure you subscribe, and I'll see you in the next one.